Day trading, a step-by-step guide to creating passive income and financial freedom with day trading, including the best strategies, tools, and psychology to earn in the stock market. Written by Joseph Mallardh. Narrated by Nick Palmer. Chapter 1. What is day trading? It was a time when the only people who were able to trade were those who worked for large financial institutions, shops, and trading companies. However, the rise in the global net has made it easier for normal investors to enter the match online shops and brokers. Venturing into day trading can be absolutely profitable if done the right way, but for newbies, particularly those who are not fully prepared in a clever approach, may be a little hard. But what does day trading really mean, and how does it work? The attraction of the day trade is undeniable. It seems far more exciting to earn your revenue from the comfort of your own home than many 9-to-5 employment opportunities. The problem is that day merchants can ruin their portfolios at a glance, either rashly or inexperienced. Day trading, and trade in general, consists of buying and selling with the goal of enhancing the difference between selling prices and buying prices of various financial tools such as currencies, options, futures, and stocks. The day trade is a slightly different from the other kinds of trading because positions are rarely held indefinitely or when the domain of trading is closed. At first, the trading of the day was available only to financial firms, for example credits, as only operations and business figures were linked. However, with the latest technology like the internet, personal traders now have immediate connections to the same transactions and market data and are able to do the same business at very small costs. Conflict. One of the most discussed and confused subjects in Wall Street could be the benefit of possibility of day trading. Day scams have attracted amateurs in a short time by offering large profits. The concept continues that trading like this is a fast-growing arrangement. Some trading individuals without enough understanding on the day. But, although, or perhaps due to, the hazards, there are traders who live successfully. Many professional financial executives and economic advisors are timid because profits in most instances do not justify the risk. On the other side, those who make daily trade rely on making profit. Day trade is lucrative, but the achievement level is smaller intrinsically as a result of the difficulty and required day trade danger associated with associated scams. Trading the day is not for all and involves major hazards. In addition, a thorough knowledge of how economies operate and multiple short-term profit policies is needed. History of day trading. Day trading is fairly new, rendered feasible in the last decade by several occurrences and rulings. Consider the critical occurrences that had an influence on the evolution of day trading. 1867. After the telegraph was created, the first ticker was created so that data on activities that took effect on the interchange ground could be communicated easily. In order to guarantee that they have constant availability of paper and the latest data, most couriers on the New York Stock Exchange maintained their neighboring offices. 1928. Traders didn't have uninterrupted market access at the height of one of the most significant bull markets on the stock market. They had to put instructions using data from the ticker tape via a broker. 1971. The National Securities Dealer Association, NASD, set up a separate network of digital commerce networks, the ECN and the NASDAQ. An ECN is any software scheme to enable economic goods to be traded outside of inventory markets. 1975. The SEC
Sample complete. Ready to continue?